maybe I'll take this part of the answer to you. You're right to make a difference between different types of companies. We've discussed, heard a lot about the bits-based companies over the last few hours. When you look at the atom-based company, obviously it requires much more money, and the contraction in the market does create some problems for that. Part of the answer is in what Basil mentioned. 40% is coming from the outside still in Canada. In clean tech, more specifically for you, you're not lucky in terms of timing where there's not too many funds in Canada doing pure clean tech. There are a few, not too much. They're not, they don't have a lot of funds, each of them, so it's going to be a tricky proposal. But if you use the approach of Antoine on one end, and you can team up with some of the American funds that are still doing deals in Canada in clean tech, you might be able to go around. We have a deal in Quebec that was done in a clean tech company that was done by one of the sister funds of Antoine, which is Row Ventures, that are based in New York and Palo Alto, invested in Montreal-based, in Sherbrooke-based company in clean tech, and are taking it on the right side. So there are some possibilities for you.
I wasn't actually talking about my specific needs. I was more speaking of a general concern, and my general concern is this. We're investing millions and millions of dollars in our academic institutions. We're now investing millions and millions of dollars in commercialization programs of taxpayers' dollars. We are involving angels more and more in hopefully a variety of industries that will create jobs and generate wealth in Canada. And if the answer is that you'll have to seek your next round of investment from offshore, so to speak, is that really the best answer for this country? So I appreciate your responses to a scenario that is near and dear to my heart. I know what I have to do, but as a Canadian, I'm just looking at how we take things to a certain point. We're asking our angels to get involved in more than just IT investment, I think. I mean, there are huge opportunities to be realized in water, in solar, in wind, in advanced materials, which we are expert at, by the way, and advanced materials that take advantage of our natural resources as well and extend that so that we can build up our manufacturing industry again. And yet the answer is, well, go offshore to get investment. So why is that the only solution that we have here? And what is the right solution? Should we, I don't disagree with the fact that we went through a bubble of too much money going into too many poor deals, but I'm, as a Canadian, I'm just not convinced that the answer is that we should not have a robust local sources of investment. And Jacques, I guess you're part of that solution.
I hope.
Pardon?
I hope I will be.
I hope so too, but it just seems to me that we've had this contraction. I think, if anything, we've hit a tipping point where it's too few companies to satisfy the needs here. And if the model's broken, I accept that reality. What's the fix? So you said it's time to review the fix. So what is the fix?
Well, it would be a long answer to this complex problem, but few parts of it would be that I cannot agree more with you on the fact that transformative science from the university, from the research lab, are finding no money to continue. A lot of the money has been put in other type of companies over the last 10 years. And we haven't seen much transformative science creating something in Canada. So we're spending billions of dollars in university labs, in R&D labs, and we don't see much coming out of it. Is it because of the quality of the science? Is it because of our lack of commercialization? Is it because of the lack of university transfer program that in some case creates monsters because they want to have shares in the company with stupid models? There's many parts to it, unfortunately. So we have at least to continue fighting for it, to make those changes happen. If we just say, it's not there, and we do, as I said earlier, I lie on my back and put my belly up and said, I'm going to die. So it's not the approach, obviously. So you have to continue to promote, and we're seeing a change slowly. In Quebec, we're very lucky to be able for me to pull up this, the creation of Teralys Capital last summer of that size in Quebec. It's a unique event, basically because few players, in this case 3 players, Caisse de Depot, which is a pension fund, Fonds de Solidarité, which is a retail fund, and the Quebec government, believe in the impact of entrepreneurs in technology. We were lucky to have that. When I look at my counterparts in the rest of Canada, they don't have that much chance or luck. Federal government hasn't yet done much in this part. So it's a complex answer for your problem.
Let me try and rephrase Karen's question, if I may, and stop me if I stray too far from what you were hoping to get an answer to. I think as Canadians, we would all agree that we would like to have jobs here. Jobs not only for ourselves, but for our children and our grandchildren, to have a healthy tax base. And I think part of your question was, why is it that we have to get the capital from somewhere else? And maybe I could rephrase that and say, would we be better off if the capital all came from Canada? And if I can take your question and just twist it a little bit, I thought I heard in your question, you know, is it like other things we're familiar with? Is it like the fact that none of the clothes we are wearing were made in Canada? None of the electronics that we're using in our homes or our businesses come from Canada. None of the cars that we drive come from Canada anymore. Now, all of those things have increased our standard of living. So I think the question is, and especially for those government members here, do we need to have a more significant share of the capital coming from Canada? Or are we building better, stronger companies because we're competing on the global market for that capital?
Can I take a cut, knowing almost nothing about the Canadian venture capital market, that maybe there's a corollary, or just maybe one story was, prior to our Mint.com exit, the next most meaningful, largest exit we had was a company called StumbleUpon. And when we invested in them, they were in Calgary, and they eventually got acquired by eBay for $75 million. So they reached south of the border for capital. A separate story is we moved the company. They decided to move to the Bay Area, which is where they needed to be in their, you know, kind of Web 2.0 ecosystem, and it worked out perfectly eventually for eBay. But the corollary I would bring is that in the short term, I think entrepreneurs need to go where the capital is, even if it's south, you know, or elsewhere. But I think in the longer term, hopefully, venture capitalists are capitalists, and they see what's happening, and they look for opportunities and react. And I'll give you an example in the States. In our first set of funds, we did 70% practically of our investments and our dollars in California, even though we were based in the East Coast, because that's where the deals were. Since we have raised our second fund, we've done almost an even 50-50 split with California and West and New York City, Connecticut. And as we looked at the New York City market, we believe it's underserved by venture capital. There are a handful of known firms there and an incredible amount of great companies building up. And we were making investments, but we weren't considered a New York-based firm. So we just opened up an office, and we're putting a stake in the ground, and we hired an EIR to help us get close to the community. And so we're going where we think there's an opportunity, and hopefully that's what happens in Canada.